The year 2022 was a tumultuous one for the economy. Now, despite the economy remaining strong, unemployment remained at historic lows and wages continued to rise, which led to the Federal Reserve continuing to pump the brakes and try to cool down the inflation. Now, the Fed raised rates in hopes of slowing the economy, but with many businesses still hiring, the economy did not slow down as quickly as expected. Now, this resulted in a growing possibility of a recession causing turmoil on Wall Street. Now, investors saw double-digit losses on both risky assets such as stocks and risk-free assets such as U.S. Treasuries. Now, this was a big issue for retirement plans and pension systems, and as no matter how well diverse portfolios they were, there was no risk mitigation in them and all losses were incurred. Now, the housing market was also impacted, with U.S. existing home sales plunging to a 12-year low in December of 2022. Now, the Federal Reserve's interest rate hiking cycle pushed down housing prices, causing mortgage applications to decrease. Additionally, the crypto market saw several companies wiped out, leading to the onset of the what's called crypto winter. Now, this financial turmoil was not unrelated to the Federal Reserve, which is facing investigations from U.S. regulators and potentially the Department of Justice. Now, the Fed invested $3 million into creating asset bubbles, such as those in the stock, bond, real estate, and art markets. Now, when these bubbles burst, it caused a downturn in the economy. Now, bubbles tend to be everything. Bubbles these days because they are a source of cheap money that's not limited to just one market. Now, if it is cheap to borrow money, then it's not just real estate, stocks, tech, and telecom, or Bitcoin that will be impacted. All markets are connected, and what propels one will propel them all. Now, when the tide goes out, as Warren Buffett famously said, you see who's swimming without a bathing suit. So many people, including financial experts, believe that there will be a bigger correction at some point. However, when this correction will happen is uncertain, as the current age of easy money has artificially inflated these assets. Now, debt has been increasing while interest rates have been decreasing for decades and decades. This has resulted in the potential for continued corrections long into the future. Now, while it is not advisable to sell one's entire stock portfolio right now, it is crucial to be cautious, especially if one needs their money in the next few years. Now, the current financial transition is a once-in-a-lifetime event, and everyone needs to prepare accordingly. Now, in summary, the year 2022 was marked by financial turmoil in various markets due to the Federal Reserve's policy of cheap money. Now, the potential for future corrections looms, and I caution you to be ready